Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 3rd of September 2023, and this is a repeat of yesterday's gold and silver weekly update. Last week we saw gold prices rise quite strongly, and there is every possibility that it may continue to do so over the coming weeks, right up to $2,000 an ounce and even more. What are we predicting for this coming week? Well, let's take a look. Okay, first, just a quick reminder. We've set up a second channel entitled Finances Do Matter, which now has over 150 videos, producing between 3 and 5 a week, covering a whole array of financial topics. We've placed a link in the description box and comment section below for those who have not as yet joined that channel. Meanwhile, going back to what happened last week and what we expect to happen this coming week, well, gold rose by $25, rising from $1,915 to $1,940, having hit a high of $1,953 and a low of $1,913, a rise of 1.3%. In sterling terms, it finished the week up £18 at £1,541, and in euros it closed at €1,801. That's up 27 euros. Silver fell 4 cents, falling from $24.23 to $24.19, having hit a high, though momentarily, of $25.37 and a low of $24.07, a fall of just under 0.2%. In sterling terms, it's down 4p at £19.24, and in euros it closed at 22.48 euros. That's unchanged. The gold-silver ratio rose from 79 to 1 to 80.2 to 1. It seems to like this 80 level. Not quite sure why. The difference between gold's high and low was $40, and the difference between silver's high and low was $1.30. Now, this is what we said last week concerning our forecast. We envisage gold will trade between $1,875 and $1,960, which it did, quite comfortably. We also said that silver will oscillate between $23.50 and $25, but pointed out there could be some pressure towards the top at $25.50 as outliers, which it did move into, but as I said, momentarily, and then fell back within the normal predictive trading range. You see, silver struggled really to want to go above $25, which is exactly where we put really our normal trading range limit. Looking at other financials, Bitcoin stands at $25,787, down $214 on the week. We produced on Finances Do Matter a video on Bitcoin and cryptocurrencies. When Bitcoin fell to $26,000, we basically asked the question, is this the end of crypto? We think potentially it is, but not quite yet. Equities were stronger across the board. Dow Jones closed up 491 points at 34,837. The S&P 500 up 110 points at 4,515. The Nasdaq up 441 points at 14,031. And the FTSE 100 index up 126 points at 7,464. A good week for the markets. Oils were also higher and worryingly heading for this $90 level, which is not going to help inflation. Brent crude closed at $88.55, that's up $4.07, and WTI crude closed at $85.55, that's up $5.72 on the week. The dollar index, though, surprisingly was up, though it had been up a lot more, at 104.26, that's up 0.18 points on the week. Now, in terms of economic data last week, we had consumer confidence index for August, which proved to be 10 points lower than expected at 106. The ADP employment report came in on Wednesday and gave us 177,000 new jobs against expectations of 200,000, so it was weaker. And GDP revision for quarter 2 was downgraded from 2.4% to 2.1%. The important data for the week, really Thursday and Friday, first of all the PCE figures, and they came in broadly as anticipated. Year over year, PCE stands at 3.3%, and core PCE, which is perhaps the more important, came in at 4.2%, both marginally higher than the previous month by 0.1%, but came in at the level economists were anticipating. Then the US non-farm payrolls on Friday came in slightly higher for August than predicted, with 187,000 new jobs compared with expectations of 170,000. But to counter this, the unemployment rate rose from 3.5% to 3.8%. And hourly wage rises dipped from 0.3% to 0.2%. So overall, the figures for last week shows a slowing economy, inflation holding steady, but still in an annual downtrend. And this may prove enough not to raise rates in September. There may be one fly in the ointment though, which we'll mention in a few moments. Now, this coming week, we have no data being announced on Monday because it's Labor Day. We have factory orders on Tuesday, services PMIs on Wednesday, a number of Fed governors and officials speaking on Thursday, and consumer credit on Friday. Now, the following week, and the potential fly in the ointment, we have another measure of inflation, which are the CPI figures, which will nail once and for all whether the Fed raises rates or keeps them as they are when they meet on the 20th of September. So we're not expecting great sparks next week, and envisage most of the action will be the following week. However, where does this leave us in relation to gold and silver? Well, gold met resistance at $1,953 and fell back to the 1940 region. From a technical point of view, it has confirmed a bullish reversal on the weekly chart. The next target is the 78.6% Fibonacci retracement level around $1,965, with support a little under 1930 and very strong support at the 200-day EMA at 1909. I prefer psychological support though at 1900. With the data announced last week, it does suggest that an interest rate rise in September is unlikely, and as this view gains momentum, we may very well see a strengthening of the gold market as the dollar weakens. However, we should still be mindful that the PCE data is continuing to show persistent inflation, and this should not be ignored, and we'll look forward in a fortnight's time to see if the CPI data backs it up. Silver markets were strong on Tuesday, holding relatively steady through the week, and then fell back on Friday, slightly worryingly so. Whilst it has made attempts to go beyond $25, it struggles and then retraces. Apart from an unusual momentary spike on Friday, it showed little interest in attempting a consolidated move to $25. Now, while silver will of course benefit from a weakening dollar, if the cause of that weakening dollar is a slowing economy, there will be some downward pressure due to reducing industrial demand. This is the paradox and the dichotomy and the schizophrenia of silver. That said, silver has support at the 50-week EMA of $23.28 and very strong support at the 200-week EMA of $22. So, with this in mind, next week we envisage gold will trade between $1,900 and $1,980, with $1,880 to the downside and $2,000 to the absolute upside as outliers. Silver will oscillate a fair bit between $23.50 and $25.50, perhaps more so above $24, but we shall wait and see, with $23 to $26 as outliers. What do you think? Please do share your thoughts. Meanwhile, don't forget, subscribe to our Finances Do Matter, but as far as this channel is concerned, we'd appreciate a thumbs up, a subscription if you haven't done so, and press that bell sign so you're notified of our videos as and when they're published. As always, it goes without saying, have a very enjoyable, safe weekend and prosperous week ahead.